all you need to know, the Bloomberg Quint podcast that prepares you for the day's business. Good morning and thanks for listening in. This is the daily morning update from Bloomberg Quint and I'm Alex Matthew. If you're in Mumbai, I hope the thunder didn't keep you up at night. Let's hope the weather and everything else for that matter returns to normal soon. Speaking of things that aren't normal, the number of COVID-19 cases in India rose by over 63,000 to 72.4 lakh in the 24 hours to 8 a.m. The daily positive rate, which is the number of people that tested positive out of the total number that were tested, stood at 5.16%. So while the number of fresh cases has reduced, it's still continuing at quite the high pace. Meanwhile, globally, COVID-19 is once again sweeping across Europe in a second wave. France imposed new curfews in major cities. The Dutch Prime Minister ordered a partial lockdown and Switzerland broadened rules on mask wearing. Italy and Portugal, meanwhile, reported record numbers of new cases. Now, you're aware that the Indian economy is slowing significantly on account of the pandemic. I told you yesterday about the International Monetary Fund's revised India growth outlook. It turns out that according to the IMF, the slowdown in India's GDP will push its per capita GDP back below $2,000, which is seen often as an inflection point for economies. What's more, it's likely to take another year for India to recover fully from the losses on account of the virus. In news in the aviation space, Indian airline companies registered a lower load factor in September compared with August, but that's probably because more flights were operated during the month as lockdown restrictions were eased. The number of flyers also rose to the highest in 3 months in September. So we are headed towards normalization of activity, at least there. In corporate news, the big talking point at the start of trade is going to be the Infi results. My colleague Hormuz will tell you more about that. But besides the results, employees of the company were likely happy to hear that salary increments and promotions that were put on hold on account of the pandemic will resume in 2021 and will be effective from the 1st of January. Also, the company is giving out 100% variable pay and special incentive to employees for the second quarter. In international news, in the US, Treasury Secretary Steven Mnuchin has downplayed the chances of striking a stimulus deal before the election. His remarks came after another in a long series of calls with House Speaker Nancy Pelosi that have failed to seal the deal. While he hoped for bipartisan support for Senate Majority Leader Mitch McConnell's latest idea, which is a vote on a narrow bill next week to help small businesses, Democratic leaders, it seems, have no appetite for piecemeal measures now. Also remember, today is the deadline that the UK Prime Minister Boris Johnson has set for thrashing out an outline for the trade deal with Europe. European leaders have said that they will not be pressured into making concessions, so watch out for what happens. In international markets, US equities fell yet again as hopes of a stimulus fade. The Dow and the S&P 500 ended lower by about 0.6% each, while the Nasdaq declined 0.8%. Stocks in the Asia-Pacific region have started mixed. The Australian benchmark was higher by about 0.9%, but the other two early risers in the region have started off in the red. And with that, it's over to Hormuz Fatakia for the trade setup for the day in India. Good morning, Hormuz. How are we looking today?
Good morning to you, Alex, and to our listeners as well. At 2:30 p.m. on Wednesday, the Nifty Bank was just starting to recover from the day's low. 60 minutes later, it ended 725 points off the day's low with gains of nearly 400 points. That was the kind of drama we witnessed in the final hour of trading yesterday. And if the Sensex and the Nifty are up for the 10th straight day, you know whom they should be thanking. The last time the Nifty was up for 10 straight days was back in January of 2015. For the Sensex, the wait was even longer, stretching all the way back to October of 2007. So what do we have in store for you today, other than the weekly options expiry and the resultant volatility that comes with it? First up, earnings. Some bullish commentary coming in from Infosys. It has raised its FY21 revenue as well as operating margin guidance. The revenue guidance has been raised to 2 to 3% from the earlier 0 to 2%, while the operating margin guidance now stands at 23 to 24% from 21 to 23% earlier. Constant currency growth this quarter was 4%, higher than the estimate of 2.5%. No buyback announcement, but the company has declared a dividend of 12 rupees a share. Strong commentary also coming in from the management of Tata Elxsi. MD and CEO Manoj Raghavan has said that the company is going into the second half of FY21 with a strong deal pipeline across verticals. He also said that the company is back to pre-COVID momentum and expects it to continue in the second half of FY21. The company saw double-digit growth in its net profit and margins expanded over 400 basis points due to lower operating costs. Also reacting to its earnings today will be Goa Carbon, whose net loss narrowed as compared to the previous year, as did the operating loss due to lower raw material costs. Also reacting will be Den Networks, where net profit more than doubled from last year due to lower taxes, while margins expanded due to lower content costs. Amongst companies reporting earnings today include Mindtree, Cyient, South Indian Bank, Hathway Cable, and Rane Brake Lining. Remember, Rane Brake Lining will also be considering a share buyback proposal today. Away from earnings, the government has approved the demerger of the under-construction Nagarnar steel plant from NMDC. Post the demerger, the strategic divestment of the unit will take place by selling the entire government stake. The estimated cost of setting up the steel plant is over 23,000 crore rupees, and the demerger is expected to be completed by April of 2021. Watch out for United Spirits, as the company has entered into a definitive agreement to sell its entire shareholding in its non-operative arm turned distilleries for 30 crore rupees. A couple of stocks on the back of large deals. An HDFC mutual fund has acquired 1.3% stake in Transport Corporation of India at 228 rupees a share. Also, Abacus Group has acquired 7% stake in Acrisil at 101 rupees a share. So keep that stock on your radar. In key brokerage updates, Credit Suisse has upgraded Ashok Leyland to outperform from neutral. It has also raised its price target to 95 rupees from the earlier target of 68, citing strong replacement cycle for the CV segment. Some of the buzzing stocks that I want to highlight from Wednesday's session: Nifty IT's longest winning streak in 22 years came to an end on Wednesday after the index snapped a 12-day gaining streak, ending over 1.3% lower. SBI Cards ended at a record high on Wednesday with gains of over 4%, which was the biggest single-day gain in 3 months. Another stock that ended on a record high was InfoEdge. The stock ended higher for the third straight day with gains of over 4.5%. Early ticks on the SGX Nifty indicate that the index is trading flat around the mark of 11,980. And here's my daily reminder for you. Do log into BloombergQuint.com and read our all you need to know copy to keep yourselves updated ahead of the day's trade. With that, I wish you a safe day ahead, and it's back to you, Alex.
Thanks, Hormus. And as always, thank you all for listening in. This is Alex Matthews signing off. Have a great day.
I hope you enjoyed listening to All You Need to Know. Did you know that you can listen to this show on the IVM Podcast app? On the IVM Podcast app, along with this, we have a number of other shows which you think you'll enjoy. Listen to Cyrus Says with Cyrus Brocha as the host. Listen to Paisa Vaisa with Anupam Gupta. The Scene and the Unseen with Amit Verma, or Shunya One hosted by Shiladitya Mukhopadhyay and myself. Check out the IVM Podcast app to get more talk content that you will enjoy.